Welcome to another interesting episode of Because Money. Today we have back Robb Engen, one of the first co-hosts of Because Money and writer over at Boomer and Echo and lots of other places. Robb can be found writing in all kinds of venues, including national newspapers and his own many other sites in addition to Boomer and Echo. Robb, how have you been doing?
Doing great, thanks. Thanks for having me back. I love what you've done with the place.
Nice.
Which is a really non-awkward segue to tell listeners that we're on all the podcast places now. You can see how familiar I am because I say podcast places. Yep. And we would so deeply appreciate any reviews that you can throw our way. That's my plug for the evening.
In the podcast places.
In the podcast places. So, Robb, other than being very upset about air miles, what have you been up to this summer?
Well, I feel like it has been the summer of air miles. I think I wrote that open letter, or first wrote a little bit about what was happening with the program, and that got picked up by CBC, and so I think I've been doing I did 20-some interviews, radio interviews on CBC over the summer during my summer vacation. Sorry, Lindsay. But yeah, I mean, just kind of back at it now with full-time day job and still doing the fee-only planning on the side, writing for Boomer and Echo, writing for Rewards Cards Canada, and still writing for the Toronto Star's tablet edition. So lots going on and certainly keeping me busy.
Wow. And is your fantasy team keeping you busy?
My fantasy team is brutal, just like my real-life team, the sad Cleveland Browns. So yeah, I haven't watched a ton of football this year, and I think that's showing across the NFL's ratings. They're down a lot, and I'm sorry to be one contributing to that, but I blame my 0-8 Browns on that.
That's right. My household is picking up the slack. Fortunately, I am now excluded. I don't have a fantasy team anymore, and I just feel free. I feel light and wonderful.
Did it get pulled from you?
No, although that I'm sure was not too far off of the horizon. It was bad. It was not good. You know that.
How many years did you play fantasy, Sandy?
I won in 2009. So I played in 2008 and did abysmally, and then I won in 2009, and then I never even came close to the finals ever again. So it was a total fluke.
That's an unexpected fact. In all our fantasy talk over the last little bit, I did not know that you had actually engaged in it. You haven't always been portrayed as a sportsy person. Well,
see, I don't like sports, and I don't like football, but my husband loves it.
Major problem with doing well in fantasy, yeah.
Right, so I thought that it would be more interesting to watch the football that is on if I was somewhat invested in it, and that was successful. But now, I'm, in terms of time available to invest in things, that's low on the list. Let's say that.
There's so many players. There's a lot of them.
It's too many people to keep track of.
I was doing a fantasy hockey league for a while, and it got to the point where I was drafting all the players that were about to retire, and I was like, oh, that guy's great. He's like, he is 40 and barely on the bench.
Yeah, but name recognition, right?
Well, exactly. Anybody that used to play for the old Jets, I was all into, and then I realized that, those
Team
guys
Solani's on his way out, right?
Weren't great anymore. Yeah. I had Solani for a lot of years. When I probably shouldn't have.
So what you're saying is you were drafting based on past performance, not the intrinsic value of the player.
That is literally your greatest segue yet.
And on that note,
really solid.
So what we're going to do is play fantasy portfolio draft. And I know everyone is super excited.
Awesome. Anybody
that's ever played a fantasy sport of any kind will know sort of what we're doing. We're going to do a snake draft. So I have pre-selected a roster of potential mutual funds that these three lovely gentlemen are going to be able to draft onto their portfolio. Here's one rule that we didn't talk about. You can just stop at one if you want to. You don't have to have three. There's 9 potential funds. John is putting them up on the screen now. There's 9. If you want to just stop at 1, you're free to do so, and if you want to pick up 3, that's also fine. So, in the interest of keeping things fair, I'm thinking of a number between 0 and 11, and whoever is closest gets to pick first. So, John.
Robb, you're our guest.
Oh yeah, Robb. Oh, Rude.
Oh, well, thanks.
First guess is yours.
Appreciate it. I'll go with 3.
Right.
Okay, John.
Sorry, I said blurted out 2 before we let Rob go first. I'll stick with 2.
Well, I feel like the safe answer is to go with 4.
Oh, man,
You have
It's a
watched
bit
The
of a
Price is
journey.
Right before.
But you know, I'm
Here's-
just gonna go with it.
I don't know if you can read this. I had pre-written down number 1, so John gets to go first. Lucky
Okay.
John. Pick 'em.
Well, because I am all about the indexing, I'm going to have to pick the TD E-Series Index Fund as my first pick.
Okay.
Uh-oh.
It's nice for me to know that that was also what I considered the nicest pick on the board, so I feel validated in my heart, which means nothing for my team.
Super.
Before I make my selection, can we go over the rules here? Is this a 1 year or a 20-year time horizon?
That's true.
Oh, well, that is a very good. No, this is forever. This is your forever fund.
To keep league.
No trades.
Okay.
It's a keeper league.
Oh, precious metals. Okay. I'm going to go with the BlackRock Growth Portfolio.
Oh, Rob.
Okay.
All right. Chris ends your selection for the 2016 draft.
I'm gonna go with, and can I just say before I pick that I was saying to Sandy before how much like actual stress came from like trying to go through these funds before, just because, and this is something that you realize people get when they look at funds and they're trying to pick funds and they're trying to go through these things. There's so many different measuring sticks that you're kind of looking at. You're like, oh, should I look at asset allocation? Should I look at, where the, I'm heavy in financials here, and should I look at just the MER? Should I look at, and even when you kind of have an idea of what these measuring sticks are, it's amazing how kind of like, how complicated it can feel right away, especially when I'm picking in front of other people instead of picking secretly and just having to deal with the financial ramifications.
Oh, this feels like an employee benefits seminar, right? I mean,
it really does.
In front of you, and you don't really know what to take, and
completely
your employer certainly probably can't provide too much advice on what it is. So they just say, "Here's your alphabet soup, and go nuts."
Have fun.
Totally. And then what I think most people do, which is kind of what I did here, is you take a stab at it and then you never look at it again because you're like, I'll just pick that. And it's fine. And look, went up this year. Anyways, my pick is going to be for the RBC US Index, the Currency Mutual Fund.
Currency Mutual. Oh, very interesting. I feel like we could have a whole show just about this.
We really could.
All right, Chris, you get to pick again. Did you know that's how snake drafts work?
Oh, right. I get that.
Yeah.
Oh, and that's interesting. Okay. I did give this thought before, but I did think that there were 4 of us picking, so it's kind of off. So I'm going to double down on my index world here, and I'm going to go with the Scotia Canadian Index.
Oh, interesting. Very interesting. I'm not actually just saying words now. Okay.
I like it. No, it makes me feel good about myself.
That's coming back around to me.
It is.
Okay, so I think the BlackRock portfolio, I just had to look it up because I didn't know what exactly I was investing in, and it looks like it's very heavy Canadian, so I'm going to go with the BMO Emerging Markets.
Emerging Market Bond, that's the one?
Oh,
okay.
It's bonds.
Mm.
Oh, I'm doubling down. We'll take
Double
that.
down. Take it. All right, John.
I'll go with the TD Target Return Conservative Series D.
The great selections here, whoever picked these up. Sandy.
This was
all Sandy.
fascinating. I tried to be random, but I just couldn't help with some of these. No. There was times I was just actually it could have been a very long list. Let's just put it that way. We're lucky that the Golden Opportunities Fund didn't show up.
Okay.
John, I think that's you again, actually.
Who's pick?
Okay,
Yep, start.
then I'll go with the top one, the AGF Canadian Asset Allocation.
Okay. And Rob, back to you.
Well, I'm a two-fun guy, so I'm going to stop right there.
Oh.
Bold. Very
Boom.
bold. Chris, it's yours.
You know what? I think I'm gonna finish off with the London Life Bond Fund.
The Core Bond Fund.
The Core Bond Fund.
I really do feel like we could spend a lot of time talking about this.
It's true.
Okay. Oh no, I just put you into Faith Life Canadian Equity. My apologies.
No, please no.
Please don't do that.
That was very low on my list.
Lowish. Okay, so John, you have the TD US Index E Series. You've got the TD Target Return Conservative Series, which is a fund of funds. And you have your AGF asset allocation. So 2 kind of fund of funds and 1 US index, just kind of total market. Rob, you've got the BlackRock Growth Portfolio, which is, again, a fund of fund. Like it's, yes, Canadian heavy, but it's got some asset allocation happening in it. And then the emerging markets bonds, which I would be very interested to watch. And Chris, you have the US index currency neutral. So there's some kind of, like currency hedging happening there. You've got the Scotia Canadian Index and the London Life Core Bond. I mean, again, I think we could talk about this for a long time. How happy? Let's just kind of go through kind of Rob, John, Chris. What grade would you give your portfolio if you really in real life had to have that? How unhappy or happy would you be?
That's fair. Why don't we start with John?
Sure. I mean, given the constraints of the game here, I'm not too upset because I've got some funds of funds that are going to be covering that mix of bonds and Canadian equity, and then the U.S. equity fund. I mean, I don't think there's very much international, but there's really no choice there other than that emerging market bond fund from what I saw there. So as far as what's available on the slate here, I'm relatively happy. I wouldn't build my own portfolio this way. Like some of these funds have relatively high expense ratios, and trying to figure out what the asset allocation is there because they are funds of funds is just making things complicated.
Rob, how happy are you?
I don't know. I mean, in the 14 seconds I looked at the holdings of the BlackRock fund, I was hoping that it was a little more diversified than it was, but I want to keep my expenses low, and I'm really going after those Latin bond markets. So interested to see what happens with some of those higher interest rates. I don't want to see any defaults happening, but I think I got a solid B there for sure.
Oh wow, solid Bs. We like those. Chris, what do you have?
Solid B. I don't know if I have a solid B. I've got some elements here, but
not precious metals though.
I managed to miss out completely on the precious metal category, which is a real problem. I'm low in Latin bonds, so it's a real problem. I'm comfortable with my exposure to Canadian equity. I feel like I have an okay tool there, and for U.S. equity, but I have no international kind of anything beyond that. And my bond fund is bad. Like it's not great. I like that it has decent quality of bonds, but the expense ratio is high. So it's not the best, but I think right now, since I'm in a growth mode, I'm still telling myself that I'm young. I was more looking for hedging myself for lots of equity anyways. And so it wouldn't be the best portfolio ever, but it also, like we were talking about before, 14 seconds is probably the amount of time a lot of people spend picking
I'll pick
funds
that one.
that they hang on to for 30, 40 years because they never really look at them again. And maybe they spend 14 seconds picking another 30 funds and so that they have their own version of funds of funds. But that idea that I'm not too mad about what I got. I think it would be an interesting question before we move on, because you're right, we could spend all kinds of time. When you were looking at these funds, what was your kind of like number one thing that you were looking for when you were picking these things? You kind of gave thought or not? Like, what was your kind of like number one, I'm really looking for a fund that does this, check?
Oh, no, I was looking for some kind of egregious offenders. I wanted to make sure there was a couple of those. I think we succeeded. We succeeded. And I wanted to have some fund of funds. I wanted to actually have like some legitimate kind of building blocks to cover some of the asset allocation sleeves that we would want to cover. So I wasn't looking for like specifics for each fund. And actually, this might be a good spot. Since I said the magic word specific, I feel like confetti should come down, that we are not giving specific investment advice. That was not any of us saying, oh, definitely invest in the
Latin bonds.
Something. Yeah, Latin bonds.
Yeah. This is not an endorsement on Latin bonds.
You do.
Unless they do really well, in which case, Rob called it. You put a pin in it. This was the day.
You heard it right here, Because Money, folks, on all the podcast things.
First time. So you know,
Well,
Rob,
as commissioner of our first fantasy draft, are you proud of us? Do you feel like we drafted good portfolios?
I'm so proud of my boys.
I crave your approval.
Oh, you had it months ago. Gold stars for everyone.
Oh, fantastic. All right. You may
The
now
low bar. My now segue. Thank you. Thanks so much. Rob, we wanted to have you on the show because we miss you, and a lot of the viewers, we have had very specific by name requests to have that Robb Engen back on the show.
Was that my mom?
Interesting. No, her name was Chrissy. She gave us a glowing review on iTunes. If I can plug the iTunes review again, she seems to be an all-around nice gal.
That's one of the podcast places.
It's one of the podcast places. But we wanted to have you on specifically because we were talking a little bit about the concept of somebody having a personal economy or a family having a personal economy, as opposed to like your own kind of set of risks and kind of trends, as opposed to what might be happening in the greater economy. And we thought that actually a very good place to talk about that concept might be Alberta, because of course it's kind of if anybody in Canada, or probably not anywhere else, frankly, but if anybody in Canada is thinking about or reading about Alberta, the first thing that comes to mind is, oh, gee, I wonder what's happening, because I assume it's really terrible there and everybody is kind of in fear for their jobs and their homes and whatever because of what's happening with oil prices, etc. So I'm wondering, because you are in a very good position to be getting, people question you all the time, you in your fee-only practice and then also in the blog comments, have you noticed a change in the type of questions or concerns that people have, like from 3 or 2 years ago to now?
I think so. I mean, when you talk about Alberta, they really dealt with kind of I'd say the trifecta of issues. And one, of course, the slumping oil prices, put a lot of people out of work and or reduced a lot of hours. There's not as many projects happening up in the oil sands in the Fort McMurray area. And then you have the election. I mean, that was a huge thing, the provincial election. So we switched from a conservative government for years and years and years, decades even, into this NDP government, and what that is going to mean now. So everyone was kind of on pins and needles. What does this mean for, just like you said, our personal economy, our NDP's policies? Are our taxes going to go up? And then you had the federal election with the Liberals coming in and introducing new programs such as the child tax benefit, but also again kind of leaning on that those top kind of 1 to 5% earners, and increasing some taxes there. So a lot kind of going on in the last couple of years. But to answer your question, I guess specifically, what are they asking about? I mean, we talked kind of offline earlier about this, Sandy, and it was more about the questions like, questions I used to get was, can I afford to upgrade my house, get this second car loan, and my wife's going to go on maternity leave. We're going to have another baby. Like, can we make this all work? And the questions are very different now because just the economy has changed. People are very hesitant. So I actually had someone just recently move from Vancouver area to Calgary, and rather than buying right away, which I think a lot of people would have done in that kind of boom environment, they're really tempered their expectations of the housing market. They're took a 6-month lease just to kind of look around the area before they bought into anything, just really kind of feeling out the market. So a lot of, definitely a little more conservative happening right now. Definitely asking a lot more questions rather than jumping into, upgrading the house, getting the second car loan or truck loan, and buying, some other luxury toys or something like that. It's definitely more back down to the basics. Can I afford this? And on the other end of the spectrum is people who are closer to retirement age, so they're in the 57 to 62 years old, at the most risk of losing their jobs in terms of job projects are shutting down. These are probably the most highly paid workers, and time to transition them to retirement, so probably getting transitioned earlier than they expected, and they're wanting to know, can I afford to retire, for one? And, should I get out of this market and move somewhere else, or retire somewhere else into, up the quality of life and whatnot. So definitely a lot has changed in the last couple of years, and it's been certainly interesting to hear those questions.
Would you say that your answers are different now too? Like, just personally, would you say that you've been sort of changed by what's been happening?
I don't know, personally, I live in Lethbridge. It's 2 hours south of Calgary, and it's probably the only market in Alberta it doesn't have a real direct tie to the oil and gas. So it's very public sector driven. The top employers are, the cities, the university, the college, the health region. And so it's not as affected, but that said, we are in a recession in the province, and that's affected public sector because we're not getting the funding from the government because they don't have the money. And so, personally, I haven't had a raise in 4 years at my day job, and a lot of people are feeling that as well. So for the last 4 or 5 years, personally, I think I've been a lot more conservative in my personal budget and expectations, and I certainly would convey that to clients as well. Rather than just saying, jump into this loan or this investment or whatever, I'm really conscious of keeping some cash on hand just to make sure everything's okay. As many people in the personal finance blogging community are hit and miss on the emergency fund, but really having access to cash or a line of credit or something, you don't want to tie up all your assets in either investments or debt repayments, because you just never know what's going to happen with the economy and the job market.
Would you say that
on the job market and your own personal health?
Well, right? Emergency funds are more than just, you lost your job because of downsizing or getting transitioned out, right, John? You have a good story for that.
Yeah, that's a story for another day.
Yeah, indeed. Well, so short of, I just feel like I've just blathered on now, but kind of short of going back in time and telling people who may have been making kind of enthusiastic choices when times were good, kind of short of telling them, well, go back in time and make different choices, do you find that there's a trend in the kind of stuff you're telling people now? Again, that kind of slice of people who have, as I said, kind of been enthusiastic in the past and maybe that's kind of catching up with them.
I think the advice changes in the time frame. So right now people know that the economy is slumping, and so I think in their head they know that they could make more conservative choices. But try telling that to someone 5 years ago when oil was booming and they just got they're 25 to 30 years old, just got a 6-figure job, sales job in Calgary or something like that. And, they've got money to burn. So it's new car, it's new house, bigger than they need. And try telling them that when times are not as good, they're not going to your company's not going to hire 6 of you making $100,000. They're going to have 3 of you, right? Or 2 of you. And people just don't want to wrap their head around that, or they just don't believe it. They only see the trend is going up. It's just like the stock market now. It's just been on a roller coaster ride, it's just been going upwards, and people forget. I mean, I'm not saying that it's going to go back to 2008, 50% crash, but the bull market won't last forever. And so people who think, I'm doing great, I'm a great do-it-yourself investor, look at my returns. Well, you've never really dealt with a bear market, so how can you say that? And so I think just people see the trends and they don't want to believe it's going to stop.
It's true, and you're completely right, Rob. And I think that the truth is too, you talked about that kind of 25 to 30 demographic. For a lot of things, those people just haven't seen it yet. They honestly just, they might have seen things happen in 2008, but depending on what their experience with that, if they weren't in the job market, depending what their parents did, depending what their personal economy kind of was, there's just things that they haven't seen. I get this all the time when I talk to people about interest rates. It's 30 years old, haven't seen high interest rates. We've had low interest rates forever. And so it's really, it's one thing to see kind of in front of you, you can see the math or have somebody explain it to you, and you can understand that, but to really kind of internalize, I think it takes a moment when your private economy kind of crashes a little bit, or you have this experience and you go, okay, I understand that when things get tough, I personally and my economy need this, because it's these, right? We talk about emergency funds. We talk about, even kind of like that transitional zone into retirement. There's kind of ways that you can protect against risk and things like that. There's tools, but then there's a personal situation. And the truth is, what's conservative for me when things get tough may not be what's conservative for you when things get tough. That's a learned behavior and a learned mode to say, okay, I know that when things are bad and maybe I lose my job for a while, I can get down to that squished conservative mode. But until you're kind of, I don't know, is there a way that you can really communicate that kind of thing to somebody who hasn't experienced it? I'm not sure.
No, I agree. I think you have to go through it, or have someone very close to you go through it until you take stock of your own situation and your own finances and really kind of buckle down. I mean, it took me and I think a lot of bloggers or people who talk a lot about money are the same way. Like, it took me down to a real breaking point with debt or with certain situations to say, like, really, holy shit, I've got to get a handle on this and get serious about it.
Yeah. It's kind of like those studies that have come out about testing people's risk tolerance. The standard, like, when do you need the money and what sort of market fluctuations could you bear, that you're taking in a calm environment across from a desk. You probably took some time off work to go in. Your answers are probably going to be pretty different than they would be if someone sort of punched you in the face and then asked you the same things. So you don't, you can't.
I heard that's part of CRM3.
Right, face punching.
As long as it can go both ways across the desk, I'm in favor.
Oh, we do not advocate violence on this show, Chris.
Oh, the pacifist says I agree, but
but then there's the faith.
True, the risk tolerance, and that so going kind of to topical, what's happening in the markets with the stress test for the mortgage. I mean, everyone in the housing industry is all up in arms, like, you're going to cripple the mortgage industry. But shouldn't we be doing this anyways? Like, shouldn't we be having this kind of stress test on interest rates and whatnot? Not only in your own personal way, yes, the banker's going to say you can afford this, but personally, I'm going to go off to the side and do some quick back of the napkin math and say, no, this is truly what I can afford. But now it's being applied right at the table. I think it's just common sense, and we just haven't been doing this for forever.
It's such a tricky thing, because common sense, when it becomes common, is so clear. But before it really couldn't be farther. It's so hard to actually associate with, and it's you're completely right, and I agree. Anything that you can kind of, and it works with this idea of public and private economy. Because it's whatever you can do to say, look, it doesn't matter what the best thing in the market is. It's what actually is the best thing for your private economy. And that takes going with your napkin and just saying, okay, these are my numbers and this is how I live my life. And I know that I always do that. And so how can I balance that bad behavior, which I'm probably not going to fix, with my tool, and kind of getting the right alchemy. And that's a hard thing to legislate, and it's a hard thing to, guide somebody through, if they're, like we've been talking about, if they don't kind of feel that there's a certain amount of work that everybody, and you're completely right, that's your story is like mine, going through kind of changing when you had to change, and only recognizing these kind of things when you're kind of right up against them. But I think that within that context, are involved in the financial conversation in Canada, to kind of always remember, and I believe that's how we've been talking about it, but with these big things that happen, kind of looking at it with a huge heaping scoop of empathy, and just kind of being like, people do get caught in situations where if you looked at it on a sheet, you would say, oh, how could that possibly have happened? These things, and it was so clear and you had the options, but it's like, it's never like that. And it's hard even if people had the opportunities, I had so many opportunities to learn about money before I just didn't. Especially when something such a game changer happens, like your private economy spills out and there's big factors that actually influence it. Just to remember that, like we've been talking about, it takes stress to make the stress tests really mean something.
Yeah. Like I say every time, boy, I really like that. So I think we're coming up to the end. And here is the me doing a really, really bad segue to John to do the unnamed segment. I'm sorry, I'm going to cover my face in embarrassment with how bad that was.
Okay, you had some good
It was bad on several levels. I mean, first of all, I was supposed to throw it to you so that you could say what you were reading this week. Just to add to the last thought before we segue away, I mean, one of the things you guys were talking about was, personal experience and learning this sort of the hard way, as it were. And I mean, I don't know what the solution is, because financial education and as we're recording this, Financial Literacy Month is just starting. I'm not quite sure what the air date is scheduled for at this point, but I think it'll still be Financial Literacy Month when you get to hear this. And that helps to some extent, but blogs, I think, help to some extent, because then you get to hear the anecdotes. You get to hear other people's experiences, which might work for some people a bit better than the data, because we need to learn this not the hard way, like from other people's experience and from the evidence and from just math and statistics. Like, we should be testing for higher interest rates before giving people mortgages. You should be preparing an emergency fund in case you lose your job or you have to take some time off for health reasons or what have you, because these things may happen, and by the time they happen to you, it's really tough to dig out. So lots of people learn as students with student debt, and that's sort of the most benign it gets, and even that's no fun. I mean, you only get one life. Some of this stuff you got to learn proactively rather than by experience in the hard way.
I mean, it's hard to learn the hard way, right? I mean, you look at, just look at people who go down to the States and don't have travel insurance and have a major health event and are 6 figures in debt, and you hear the stories all the time, right, in the national news. And do we buy travel insurance still? I mean, I've been down to the States and not purchased it before. Yeah. So we still don't. We still don't learn, I guess, from those hard lessons, because why do we think it won't happen to me?
Yeah.
I think that both of you have provided an excellent balance to my, empathy first, artsy fartsy kind of look, because it is both sides of it, right? And you're completely right. You can't just wait for bad things to happen, and then you can't wait to have the lesson forced upon you. You're going to end up in a lot of trouble if that's the life strategy. And you're completely right that we need to look at these issues from lots of different ways. And I think that, honestly, you can find these kind of panic monster moments in your life already without waiting for a bigger problem. If you dig into it a little bit more, you can dig into the fact that your little bit of debt is actually a way bigger deal than you think it is. When you kind of just flip back the page, you can find some emergency type things before they get forced into your face and become massive emergencies. And maybe that's where some of the middle ground is, and that's where some of these stories can help people kind of figure out some areas that are actually putting more pressure on them than they think.
Now to segue into the other segment, what have you guys been reading this week? I haven't read anything for reasons, but how about you, Sandy?
I read something by Kate Flanders, who we all know is super. We've had on the show before. And she just came back from a very long road trip that she had planned for a long time. And she was talking about, in a post that when I emailed her about it, said, I was kind of scared to push the button on that. She was talking about being a minimalist is a privilege. It's not actually, the post isn't called that. It's called something else. But I actually just want to read just a bit segment out of it. She said, whenever I thought about consuming a lot of something, stuff, alcohol, food, etc., it's because another part of my life was lacking, and it seemed easier to fill that void with something else rather than deal with whatever was really going on. And how it's a privilege to be able to say, oh, I'm going to declutter, and here's how to go kind of through a minimalist beauty routine or something like that. there's two kind of thoughts happening at the same time, but I thought that was really beautifully written and very, as Kate is always able to do, very empathetically kind of presented. So it wasn't just kind of a lecture. I thought everybody, it's required reading, I think.
Okay. Chris?
I've read a couple of things, and they're all kind of tangentially related to money. The one thing that I just thought about when I mentioned The Panic Monster was a great TED Talk that I just watched about procrastination, which has awesome illustrations, including one of a panic monster, which is really great and made me think a lot about. It also has an irrational thought monkey. It's just really awesome, but it's kind of linked into all the things that we do to not deal with the things that we know rationally we should deal with, which I think is something that very much can have to do with money. The other thing that, just because it's right on my brain today, and I sent it out to people, but I read season to kind of put our sports cycle into, to come full circle in the sports analogies. And a great player just retired named Ray Allen, and he just talked about what it takes to be great. And he used the terms boring little habits. And he talked about how all the great players that he's ever played with got there the same way. It's just boring little habits. And I think that that's so apt to how you get good with money. You know, it's not about it's not about picking everything the best way and having all the things. It's the boring base habits. And I liked it.
Go boring.
Great. So that TED Talk builds on a couple of great posts over at Wait But Why, and I can't remember the fellow's name, but he's the one that went and gave the TED Talk. So Rob, did we warn you that this was coming up? I know I forgot to, but hopefully the others did.
No, that's okay. So I'm actually reading a book right now. It's by Warren McKenzie, and it's from Wayhouse. He comments a lot on the financial facelifts, I think at the Financial Post. And it's called Zen and the Art of Wealth. And it's really interesting. It's, kind of one of those stories that, a couple guys get together. One's has a struggling business, has a decision to make, goes out to his buddies who lives out in a cabin somewhere, and they're building a rock wall and just kind of forgetting all their problems and just talking about, are these problems really like a real, like, is this really life or death, or, is it just a situation that you need to deal with? And just really interesting perspectives. And then he offers some really great tips at the end when he actually puts the money hat on versus the story, and very common sense about, keeping fees low and really simplifying your finances. So highly recommend that one. I don't know that it's made a major push out into the mainstream yet, but I'd watch for that one, Zen and the Art of Wealth.
Awesome.
Great.
That's fantastic.
Well, thanks for coming out, Rob. And as usual, Sandy and Chris, thanks for another great episode. And I hope everyone out there listening enjoyed this one. Goodbye.